everybody's speculating on this stuff. The one constant that I would remind everybody to think about in why the use case for investing in this sector, and I personally believe over the next decade, crypto will be the 12th sector of the S&P. And the reason I believe that is when I'm in the camp that likes to have hedge funds short. That's particularly if that's the consensus, that's extremely bullish for markets. Obviously, they have to cover. If you look at hedge funds as an index, they're wrong 50% of the time, and you'd expect that. Different strategies, obviously, but the added bonus about hedge funds and why they can add a lot of volatility, and sometimes to the upside, is many of them use 3 to 7 times leverage. So when they're wrong, they're really wrong. And obviously that's even been exacerbated in the crypto market, where we've seen lots of leverage blow up all kinds of different business models, which I consider very healthy. So the reason that it's been difficult to really call the bottom in the market or time the market, if you weren't participating in it during the 5 weeks of trading in July and August, you've missed all the gains this year. And that consumers, still awash in $6 trillion worth of free printed cash, are still spending. So where we go next is a huge debate. It's whether it's 50 basis points or 75, it's one of the above. And then probably one more hike after that. And then we'll have to see what the Fed does. But all of this is baked into the market. And earnings in the last quarter have been much better than anticipated. So everybody's been confounded by the economy, by the market, and even crypto. Crypto is not yet a real asset class because it hasn't been regulated yet. So for all the excitement about it, and one of the reasons I'm long, certainly WonderFi stock and 32 different crypto projects, is that I believe over the next 2 to 3 years we will get regulation, and then finally we can get institutional participation. People forget that 70% of the world's wealth is tied up in pension and sovereign wealth funds. And so if they're not allowed to buy the asset class, there's no underlying bid. And that's one of the reasons we can't get crypto past $24,000. And so if we do get regulation first, it'll probably happen in stablecoins because that's been very volatile lately, and there is policy on the table in the Hill, bipartisan policy that's being contemplated as early as next September, which is not far away, just weeks to be looked at. And if not, it'll be after the midterms, but that's coming first. And then, of course, it'll be on to Bitcoin and others, whether they're allowed in an ETF. But that's the upside. That's why you participate. But to say that, it's a real asset class, it's not there yet. It's still nascent. It's tiny, but it doesn't mean you shouldn't invest. You should be ahead of when it's finally made a real asset class because its price will materially appreciate. That's my investment thesis. Well, I was just going to say from the context of an investor, not any one specific blow up, but over the last 90 days, we've had catastrophic failure in all kinds of different business models, from stablecoin to platforms that do lending. I mean, this is actually a good thing from this perspective. I mean, what's occurring here is the experimental business models, or what I would call, without showing any disrespect when I say this, but just idiot management teams that have never had any experience with leverage, because leverage has destroyed platforms long before crypto, whether it was stocks or bonds or real estate. If you don't understand what you're doing with leverage, you get wiped out, and you should get wiped out. And it's a very important learning experience for the market, and it scrapes the patina of idiot management out of the ecosystem, and it leaves the remaining companies much stronger, and that's the important part. So everybody learns the hard way when you deal with idiot management. And idiot management, it's like a Darwinian force. The market scrapes them out of the system. They have a very hard time coming back, and nobody will capitalize them, and that's great. And I think we're probably in the third inning of that. And the remaining companies are far better off. There's much more to acquire. There's assets out there that are very inexpensive. There's a consolidation going on. And the majority of survivors are much better at managing their situation. So, agnostic to the next thing that blows up, and I'm sure there'll be more, my attitude is, who cares? This is great news. It was important for that to blow up because it actually got some focus within Washington, D.C. on a bipartisan basis on legislation just for stablecoins as payment systems. And so the idea that we can get one bill to actually regulate the entire crypto ecosphere is not realistic, and that's not going to happen. You think about the broad spectrum from NFTs to tokens to various projects, and I always get people to remember when I can is to say to them, Bitcoin is not a coin, it's software. Ethereum software, Solana software, Polygon software. These are software projects will eventually prove out their merit or they won't based on the economics of revenue at some point and all the applications that sit on top of these. So they'll either win because they're good technology or they won't. And so if you're a venture investor, as I am, you want to take a lot of positions because you don't have certainty in what outcomes are going to occur. You need diversity. That would create a standard of payment backed by the US dollar globally. And what politician, regardless of what state they're in, doesn't want that? It secures a place for the American dollar beyond just commodities of oil and iron and other payment systems that are built around commodities that are always backed by the US dollar. But that legislation is very simple. It's 5 pages in some of the bills by Haggerty and Toomey that simply says, look, we audit it every 30 days. We make sure that nothing that's supporting the token is a duration longer than 12 months. And we have total transparency in these audits. Now, not every stablecoin is going to survive the transparent audit, but that's okay. There's enough of them that will, or be started that will. And now anything could happen. But really at the end of the day, ETH it's slow and it's expensive. And so if it doesn't fix itself, it's going to have lots and lots of competition. And so everybody has an opinion on this. And I think the market is being the market. I have a pretty big ETH position as well. I'm going to wait and see what happens because it has attracted more applications, more usage than anything else to date. But that doesn't mean it's fixed in stone. Anything could happen. And so I also think that there's other applications from HBAR to Solana, Polygon, all kinds of different ideas in terms of how this should happen and how financial services work and the cost, the speed, the fees, the transparency, audibility, security, all of these things. And I tell people, look, if you want exposure, have at least 7 or 8 positions on these projects because you just don't know. You can do it by order of market capitalization. That's easy to find out. But that doesn't mean you're right at doing that either. So diversification on this very nascent system, and whether, where it all fits, and when people tell you, well, I know with certainty this particular level 2 is going to really work, they have no idea. What you find is it's the adoption of standardization that creates value. So if all of a sudden there's 10 stablecoins that come to market for payment systems, my prediction would be that there'll only be 3 survivors 10 years later. And they'll be behemoths, they'll be very large, and they may have slightly different attributes. But, there's already 64 billion in Tether and 54 billion in USDC. They're likely to survive, assuming they can survive audit, and then maybe a few others. And always the rumor of the feds themselves creating their own digital dollar. I'm very skeptical of that. Teach graduating cohorts of engineers. I don't care what college you do it at. You can go to MIT, Harvard, you can go to Waterloo in Canada, or Temple, Notre Dame, you name it. A third of the graduating class, the smartest hands above keyboards in the world, because some of these classes are 130 international, particularly MIT. They have no interest in, as engineers, to go back to the other 11 sectors of the economy. Zero interest in working there. They all want to work on the blockchains. I'm going to predict that crypto and particularly Bitcoin will be locked between $20,000 and $25,000 until we get policy. It's just not going to go anywhere because there's not enough buyers. You need to untap the trillions of dollars being managed by sovereign wealth, and they're not going to buy Bitcoin till there's regulation. And so most of the people that own Bitcoin are high net worth individuals, family offices, hedge funds, and minor institutional clients, very minor. And so that's the opportunity, though. That's the upside. The whole idea is that if you think it's eventually going to get regulated, all of those other players will come in, and then all of a sudden there's going to be 1 to 3% allocation in the typical portfolio, which is no different than a fixed income or bond portfolio or equity portfolio. And that's when this industry will begin to mature. And then also companies will build the financial infrastructure to actually be compliant in crypto with the reporting, whether it be capital gains and losses or some kind of, lending program where there's an income to it, or staking. All of that has to get worked out, but just zero compliance platforms. And so It's really hard to do that right now. And so that's why, for all the enthusiasm about Bitcoin, virtually nobody owns it. You know, when you go to these crypto conferences, even the Bitcoin conference, there's two universes. There's 10% of the people, 1 out of 10, are hardcore Kryptonians, if you want to call them that. And they're great. They were the founders of this industry, and they're still very adamant about how it should be, and their opinions matter. But 99%, the other $1 trillion, $5 trillion, $20 trillion worth of interest, are institutions looking from the outside in. And when you go to these conferences today, the majority of people are not investors yet. And so you realize what the great potential is, but also the roadblock of policy keeping us out of it. And I would say now the US is falling behind. I think Canada's more advanced, United Arab Emirates, Switzerland, Australia, New Zealand, England, far more, mindful of the technology here. And I think if we don't get some policy next year after the midterms, we're going to start to lag. Bitcoin's not going away. Ethereum's not going away. These projects are here to stay. They're well funded. There's a lot of use cases for them. I use USDC now corporately. We have a Circle account. We've gone through compliance and our auditors setting it up. I'm a shareholder of FTX. I'm a shareholder of Circle. I should disclose, a paid spokesperson for FTX. I hold 32 different positions on my FTX account because it's the most compliant one I can find in working with my compliance department and my regulator. I do the same with BitBuy, which is, WonderFi. It's one of our divisions, and I've got a full corporate account there too, because these are compliant platforms. So I can be compliant in Canada on BitBuy, I can be compliant in the US on FTX. So you have to find your geography, figure out your compliant platform, and you have to hire a whole bunch of people to manage this stuff for you. So we're so early in all of this, but again, that's the potential. And I think that's what excites me about it. I would probably buy Bitcoin, just sit on it.